You're watching Masters in Trading Live with Jonathan Rose.
Good morning. Good afternoon from Europe. Good morning, my fine feathered friends. How's everybody doing? Happy Friday. Today, we are going to learn one of the most important lessons for traders, specifically for option traders. This lesson is so important, and it baffles my mind how many people are not familiar with this. Not only that, how many gurus out there don't understand that you could do this. Learning this one lesson is going to change your view on options. That's how important it is. We had to use it today in our position management, in our earnings academy, in our earnings advantage. So I'm going to teach it to you. This one lesson is really, really freaking important. Before I get to that, I love when everybody's in the chat saying good morning. Had you guys here 10 minutes earlier. Thank you for joining me. Good morning to everybody. Really appreciate you guys hanging out with me. We are getting to the very important lesson. We're going to start right now. Here it is. In our earnings advantage, I shared a trade February 24th. February 24th happened to be the day that I turned 50 as well. There's no correlation to me sharing a trade and to it being my birthday. That is just coincidence. So we shared a trade. And when we shared a trade, don't worry about shares. That's just to say that we did a two lot. We bought the 17.5 calls for 38 cents, or that's $38 per contract. We also bought the 15 puts for 63 cents or $63 per contract. Now, CMPO, buying calls, 17.5, selling puts at 15. Traders, we want movement. We're long from 17.5. We're short from 15. Death is in between. Okay? Here's the most important lesson that you're going to learn that so many don't realize what you can do. Compo had big news. And after that big news, the stock got its ass whooped. Oh, I gotta stop cursing. The stock fell really hard. Okay? So Compo fell really hard, down 21%. But here's the problem. 17.5 calls. They have a little bit of a market, 35 cents at 40 cents. Okay? 15 puts. Oh no! What do we do? Oh no! What do we do, guys? Scary. Or 15 puts, there's no market. Are we stuck? No. Here is the most important lesson. What do we do? You guys are funny. What do we do? Did you know that you could buy the underlying stock, buy Compo at 12.30? That's what you do. Buy stock. How can you buy stock? That's weird, right? 15 puts, 15 minus 12.30 equals 270, right? My math okay? We originally invested $1.01, whatever, right? So we make 270 minus our $1, my easier math. So you make $1.60 on your $1 of risk. Thank you, guys. Thank you. I appreciate it, but YouTube doesn't like when I curse. I don't show anybody on my videos. So, but this is the lesson. This is the lesson. When you have a call, you're long 100 shares of stock. It's the same thing. When you have a put, think of it like you're short 100 shares of stock. Then if you're short 100 shares of stock at 15 and the stock's trading 12.30, it's a no-brainer. Just buy the stock. Let me just ask you guys in the chat, Did you realize that you could do this with options? Did you realize that you can manage your options position using stock? The best way and the easiest way for position management with your options is to think of them in terms of stock. Eddie, get in at 12:15. Great fill. But that's what you have to do, because even I get it, guys. Bradley, thanks for sharing. Newbies, learn this. It's so important because it's scary if you own these and you wake up and you're like, oh my God, the stock's moving, but I can't get out. What the heck do I do? Awesome. This is Gamma Scalping. You can buy stock. Don't touch your calls. That is awesome. Another really, really fantastic earnings trade. Here's what I did. Our earnings trades have been just absolutely incredible. I learned this earnings strategy in 2011 on the floor of the Chicago Board Options Exchange. And then we opened Earnings Advantage in March of last year. So far, and this is all of the data on the closed trades, the entire portfolio is at 28%, 83 completed trades over the last 7 months, win rate of 55.4%. So we have 46 winners out of 83 trades. And then if you go through each trade separately that we've shared in earnings, this is out of control, but it's 42% average return per trade. And that compo trade is 60%. So that compo trade is just going to bring it up. Yeah, only the put side. Don't touch your calls. Leave your calls. Your calls are fine. Okay? If we did annualize the returns, 473%. Why? Because the average holding day of these earnings trades is just 32 days. Monthly consistency, 80% profitable periods. This strategy has delivered positive returns in 80% of all trading months, confirming its reliability across different market environments. So I was just really excited. This is data on all of our closed trades. These are trades that we shared, trades that we closed. Little shout out to Carmine. Volatility scares some people, but not in our Discord, because Carmine, 505 puts yesterday, buying for a dime. You could buy 10 for $100. Buying for a dime, 2,050% for Carmine. You know what we got to do when we hear that. Yes. Very exciting. One more chart. QQQs. Qs got crushed, right? Qs got crushed. But we put out a note today, actually, in our MIT Daily Live, the little chicken. The sky is not falling. We are going to be okay. Volatility is here, but volatility goes two ways. Here's what I want to show you. I've been showing you the expected move, right? Look at the expected move on the QQQs. Now, this doesn't work 100% of the time. Actually, in fact, the Qs work 88% of the time. And I'm going to show you the data, and I'm going to show you the math of the trade that's setting up right now. Because here's the QQQ. Let me go back 2 years. Let's go back 3 years. Over the last 3 years, the QQQ has closed within its expected move 83.78% of the time. Right now, it was outside. Now it's back inside. If we look in the last 2 years, the QQQ has closed within its expected move 88% of the time. So the odds are strongly in our favor that the QQQ rallies and closes within that expected move. But not only that, next week, we have the biggest volatility catalyst of the month. So we're outside of our expected move right now. It's February 28th. We are going to go into the beginning of March. We have unemployment. We have lots of activity. Guys, I am extremely bullish. The QQQ is down here. And in the next portion of the video, I'm going to expand on that with our all access members. We are coming to the end of another phenomenal earnings season. Earnings season comes around 4 times a year, and every earnings season, honestly, we really stop doing any kind of trading and we put our earnings trades hat and really focus on those trades. For anybody who's interested in our earnings or learning more, we're doing a really cool promotion. The phone number is going to be on the screen right now. For everybody else in All Access, you guys sit tight. We'll be right back.